So if you had 10 grand sitting in your bank, what would you do with it? Because you'll either spend it through, I don't know, silly habits like me with the racing simulator, or it may well completely change your future, depending on how you use it when you start and what your consistency is like. Now in this video, I'm going to go through the obvious in the room of how to invest if you've got a little bit of money laying around. Now, obviously not financial advice. I'm not going to show you exactly what to do in terms of where you need to put it, but more often the thought process that people forget about, which I think is the bread and butter of investing. With a focus on simplicity, safety, and more importantly, long-term growth. And that mindset of the long-term growth is what I think people lack, especially in the UK. We are really bad as investors. And even if you're not in the UK, this should be also applied to you. You can apply this in every country, in any type of asset. But if you do stick around to the end, I will link a video to a video that I did not too long ago that will help you if you want to do the next step. Now, a little bit about me. I invested 10 years ago. I will showcase my portfolio. It is a very small slice of my overall wealth. That thing behind me, Bitcoin, changed my life. And it was a very much a drastic element of why I think very differently now and why you need to remove the get rich quick element from your brain. Because a lot of people, now that the market is inflated, think they're going to get rich very quickly because they're seeing a lot of people's portfolios. I get it, but don't think like that. You will lose very quickly. Now, one whole pound. You need a lot of these to make some money. And the best currency in the world, in my viewpoint, is time. You trade your time for money, whether it's euros, dollars, pounds, whatever, right? It's about momentum. You go to work, you do 40 hours a week, 30 hours a week, 20 hours a week, whatever it may be, and you get paid. And then the proof in the pudding is, what do you do with that money? Do you spend it? Do you invest it? Do you save it? Now, saving for me, there's one element to it that you need to worry about. There's investing, that we're going to come on to that in a minute, and obviously spend it. You've obviously got house, income, bills, whatever. Now, that situation is important, but £10,000 or $10,000, 10,000 euros, if you've got it laying around, you kind of need to use it at some point, realistically, because there is so many different things. Now, the problem is, most people just stop there. They do. They just go, I'm not going to invest that. I'm just going to sit on it, put it under the mattress, and hope I don't lose it in a house fire, because it feels safe. As I said before, the UK have a very low population of investors. It's just the way it is. There's also other elements around why our government policy is a bit rubbish in terms of making it harder. Inflation, let's talk about it. £10,000 in 2015 is probably worth about £6,000 or £7,000 realistically, because the prices and buying power has changed massively. You've also got, obviously, the situation I just mentioned. Saving your money feels safe because it is insured by the banks and it is safe, and it actually loses value over time. And investing gives your money a job. That's the fundamental crux of it. If you're exchanging time for money, which is a problem, you want to then have that money to do something for you, to scratch your own back and wipe your own ass in certain ways. Your goal isn't to take huge risks, it's to make your money work. So I'm hoping it works better than your 1.25% savings account that is sat there in the NatWest or something like that, versus, say, investing. Building your foundations. Now, I'll put Chase on the screen just for the shits and giggles, really. But before you invest, realistically, every single pound you got, you need a solid, a foundation, right? Because investing without one is like building a house without any bricks, realistically. You need an emergency fund. Now, the reason why I've put a really high interest rate savings account on here, now you are limited with these. You can't put like, some of them, you can't put like stupid amount of money in them, right? For obvious reasons. But you can put little bits in, and that should be your emergency fund. Let's start with the obvious. Now, one thing I like about this is obviously the screen of kitchen renovation. Yes, if you need to save for stuff, you do it, right? It's obvious. If you need a new bathroom, if you need a new kitchen, you save for it. You don't invest for it. Unless you've got a time horizon of like 5 to 10 years, do it and then withdraw from that. But you need at least, in my viewpoint, 3 to 6 months living expenses covered, and plonk it in a high interest account where it is accessible, where you are not locked. Some people put them in locked ones. Like, I need that. So just be mindful of that. This keeps you calm when realistically something goes wrong. You might break your leg. You might fall down the stairs or something daft like that. Or your car might blow up or something daft, right? You're never forced when you are building these foundations to sell your investments, because this should cover your ass. Long story short. Another thing as well. Let's talk about the obvious as well. Credit cards. Haha. I know. I use credit cards all the time, only for the obvious reason of rewards. And it's just easier to get points and then you pay it off every single month. But clear your expensive debt first. Know what your good debt is and what bad debt is. So, for example, a mortgage is technically a good debt. You could argue student loans kind of are not bad. But if you are up to your eyeballs in debt, you should not be investing to get out of it. You need to clear it first. So, get an emergency fund, then clear your debt. So if you are earning an amount of money in your work, but you've also got a 25% interest on a credit card that you need to pay off because you bought something silly a couple of years ago, pay it off first, please. And yeah, as much as it isn't financial advice and everything is at risk here, I'm hoping that is just common sense. Now, once you've got an emergency fund and now you've got hopefully your credit card sorted, maximize free money. Let's talk about pensions and SIPs. Wait for it. We'll go with it. Once that's covered, you need to take advantage of free money. And yes, it does exist, because if you have an employer, you may well get instant return with their own pension. So they're already putting money in a pension for you. And you're working. It's great. So you are technically investing. Great for your long term. You've also got a SIP. Now, this is the one that I use. I've used PensionBee for a while. I will be covering it more in videos later on down the line. And what I've done recently, I've set myself up as a limited company to kind of help with certain situations around corporation tax, so I can invest in my SIP and it reduces my tax bill. That's a great way of doing it. And more often than not, you could argue, yes, if you're personally putting it in as well, which I will be doing too, you can get a HMRC top-up, free money, right? Now, that's a situation. Yes, there's risks here. And there is a link below to PensionBee if you are interested, if you are looking at a simple platform. But the thing with these is you are investing in funds that are managed for you by them, and you pay an annual fee. But with the government top-up, with potentially, if you are a limited company, for example, or a director of a company, you can use that and offset your tax bill. And more often than not, you've got some freebies there for free. Makes sense. And that is a good starting point for a lot of people, a pension. Most of the time, people's introduction to investing is through this system. Whether you're working, as I say, are a director, or if you just open up a SIP. Well, the one thing that you need to do more than anything, realistically, if you are setting up to invest and you want to invest, is you need to put your money in the right bloody place for obvious reasons. Now, obviously on the screen here is Monzo. You can invest with Monzo. It's a brilliant little account and I recommend it. There is a link below if you want to open up Monzo. Yes, it is a bank, but also you can invest through it, which makes sense. You can get a stocks and shares ISA. That is the one thing, if you are writing anything down realistically and you want to do it, you've got to write down the word stocks and shares ISA because it is tax free, tax efficiency, no capital gains, no income tax, no tax on your dividends, whatever, right? And this isn't just included to this. Obviously, there's also an ETF platform, which is Invest Engine. There's obviously a link below there. There's capital at risk, obviously. But more often than not, when you look into it, you need to kind of look at the obvious. I need the most tax efficient way to invest. Yes, there's limits, obviously. But if you've made some gains, you're not going to pay tax on it, which is important. And most people get thrown off by that. And which is why when I talk about my crypto side of it, a lot of people come into investing in crypto. They're like, wow, I've got to pay tax. Mainly because they've been using these sort of tax wrappers in the past. So yeah, the obvious one is don't use loads of accounts, but have one ISA. And that one ISA should hopefully cover you forever. Now, if you've not yet done so, please do follow along and subscribe to the channel if you want more of this sort of content. It means a lot. This is a new channel. And comment as well, what ETF do you hold? I want to know. I'm interested. Because we're going to talk about ETFs now and what you should realistically be doing as a beginner. Now the fun part, kind of. I'm going to go through this very, very briefly. But most people, right, especially with me doing this for over 10 years now, they go straight into crypto, or more importantly, they go into leverage trade in crypto. Woohoo, let's go. You need to remove I want to get rich quick from your entire brain, because that isn't how it works, right? Realistically, if you want to make money, work harder. Sell some stuff, do something daft, build a business, for example, right? Because investing, yes, can give you wealth, but it's all about consistency, it's about time, and being able to put money in. More money you have, the more money you'll make. Funny enough, that's kind of how life works, realistically. But when we talk about like platforms like Just ETF on the screen here, the one thing that I will say to people is very, very simply this. Go to markets on Just ETF and just go to the MSCI World. Why? This is the entire international market. Basically, long story short, if you hear the words all world fund or the FTSE Global, whatever it may be, and they've got 3,000 plus stocks in them, that is the entire globe, basically, right? They have the lowest fees, and you are basically tracking the entire market. That is where, if you're a beginner, you start from, because you need to get conditioned to the fact that money goes up, money goes down. Simple as that, right? And over the course of time, you can see, arguably, we are in a roaring bull market. Kind of, in a way. Certainly when you look at the obvious in the room. And you can see here already, 17% over the course of the year. Now, in my own portfolio, I have dividend stocks. They're a bit different. They're a bit more technical, but you get paid every single quarter essentially. But my goal is to hit a certain number. My plan is to diversify profits into that over time, and it will snowball, right? But I bought into the FTSE All World Fund. This has 3,000 plus stocks in it. Now, I've only held this for a very short period of time. Not that long at all, realistically. It's already up 7%. That's ridiculous, by the way. So just be mindful of that. These will not always be up only. It has been very aggressive. It has been crazy. And over the course of the year, as you can imagine, it is ridiculous. 18% over the last 12 months. Crazy. Now, with my own portfolio as an overall metric, and a lot of people go, oh, how much do you invest? I've invested 51,800. Realistically, yes, I have. You can see the data is a little bit different on trading 212, but I've redone my entire portfolio. I'm up 10 grand. And I've only been realistically investing about a year now, which is quite a ridiculous number when you think about it. But the reality is here, this is because we are in a very bullish period. A lot of people want to invest in the markets, but overall, time is king. In 10 years' time, if I am continually adding the amount that I want to put in every single month, and that is no change, that number will be massively higher because the markets will naturally go up. They will also go down. You get more aggressive in the crashes, you buy more, and you just sit, because that is how you make money work for you. If I didn't invest, I wouldn't have that £10 or £9,910 profit sitting there. By the way, if you like this platform, there's a link below, 14-day free trial. Really good. It's called Snowball Analytics. It's amazing. Now, I did allude to dividends. I don't hold a dividend index, but I do hold individual stocks in the UK. For me, individual stocks are a lot harder, but if you pick quality ones, it's fine. But not financial advice, of course. But if you are a beginner and you want to get a yield and some sort of income, dividend ETFs are probably the better way to go. However, they are more volatile. They do have a bigger cost ratio. And more importantly, yes, the price isn't the best in the world on dividends. And sometimes if you go higher risk in terms of high yield, they don't do as well. Now, going back to the automation side of why habits will hopefully become a secret weapon, it's more the fact that you need to set it up monthly. In a way, it depends on you. But it should be a part of your budget. If your budget is counting in the fact of you are investing as, you could argue, an expense in a way, you will be able to do it very easily. And on the screen here is just a random goal that I've just plucked out my ass. Basically, £150,000 will be roughly my portfolio with the contributions of that per month. It's a lot of money per month, but I am aiming to get £20,000 in terms of the ISA limit every single year. That is me though, right? Everyone is different. But as you can imagine, you can hit numbers very, very quickly. And it goes off your rate of return of your own portfolio. So it will help massively. So if you've got dividends, you will reinvest them, for example. That situation should be an obvious one. You're not trying to outsmart the market here. You're just building wealth quietly in the background. That's the obvious, right? Because if you're in the All World Fund and you are getting on average, say 8, 10, 12% per year, that's fine. But that is over a 5-year basis. There may be periods of losses, right? Obviously. But you can see, you can program roughly the sort of situations around these parameters where you can look at what is happening in terms of inflation, your average returns, your contributions, but also you can change the safe scenario in terms of this. So even if you're on the safe scenario of 10%, realistically, over the course of time, you will make money and your overall goal will be different and the amount that you put in will be worth a hell of a lot more. And then over the course of time, it will be worth a very big amount, which is very, very important. And even if we change it to say 500,000 here, which is a lofty number, my goal is in 11 years that I will hit that roughly, give or take, which is pretty mental. But when we talk about investing, stocks and shares ISA, I mentioned before, time is your best currency. With a stocks and shares ISA, you don't pay tax. You are also not limited by the self-investment pensions, which is important because you cannot take them out until you retire. If you're the same rough age as me, in 11 years' time, if you're putting that much in and you're getting them same sort of results, you could have a lot of money, a nest egg, which you can be able to draw out or change it into a income kind of portfolio with dividends, for example, and maybe reduce your working hours, for example. Get some of your time back to spend with your children or whatever it may be. That is why you make money work for you. It's kind of obvious in a way because no one gets rich by saving, let's be honest. Now let's talk about some common mistakes. And I think the most obvious one is waiting too long. People look at the market and go, that's really high. Why would I want to invest in the S&P or the NASDAQ? It's stupid levels. And yes, it will look crazy. And it is, in my viewpoint, not financial advice, at euphoric levels. But nothing wrong with starting, because if you are dollar cost averaging, it will eventually average out. Even if we get a period of like a 2 or 3 year bearish period, you may get some fantastic orders. And when that market goes back up again, whew, yeah, kind of laughing realistically. One thing as well, I will say very openly, is chasing the trends. Do not chase the hype. A lot of stocks will go on TikTok, for example, or Instagram. People go, oh my God, I made like 7, 8x. Whoa, this is amazing. You're probably far too late. So as I say, going back to the obvious in the room, stick with the all world fund. Stick with the obvious, the S&P 500 if you want to go a bit deeper, or the NASDAQ. But remember, just stick with the index funds, because as you get better and experience, you may well look at finding a certain stock that you may want to punt on. But that is with experience after a number of years in the market, not as a freaking beginner. And panic selling, obviously. Do not sell, because even if you're in the all-world fund, there's nothing wrong with taking some money off the table as profit and maybe holding it in cash and look to maybe rebuy back low, because you may look at that market and go, wow, this is euphoric, this is crazy. Look at gold, for example. If you bought gold like 10 years ago, nothing wrong with you taking a little bit off the table and going, you know what, I could put that in somewhere else. Oof. You know, that's pretty neat to do. But panic selling, because it's dropped 40% and you sell at the 40% mark, ooh, that is not what you want to do. Emotion is what these markets are telling you in terms of candles. £10,000 in the market, £5,000 in the market, £3,000, whatever it may be, should be boring. That's the point. You are building in the background. So a quick wrap up before we go into some obvious kind of investing, which I will recommend, so bear with me. Build an emergency fund. Pay off your debt. If you're not yet done so, sort out a pension where you get some freebies, more importantly from your employer, hopefully. Open up a stocks and shares ISA. There's links below. Buy into a low cost global ETF. That keeps it super simple. And automate and forget the bloody thing. Let it just do it in the background as an expense. Now, if you do that, in my viewpoint, you are probably ahead of 90 to 95% of people in Britain. Let's be honest. If you walk down the high street and you see people vaping and on the Monster, you're probably doing a better job than them. And the secret to wealth isn't luck. It's just structure, patience, and a lot of consistency. Unfortunately, for a lot of people, they miss that part. Now, if you want to see how I've looked at portfolios and building a lazy ETF portfolio, watch this video that I'm recommending. It will help you massively understand the obvious, but it will go through how certain platforms work and why you should be using them.